Hello, everybody. My name is Drew Dosek, and welcome to Trading the Close. Hope everybody had a fantastic weekend, and back into the markets we go. But today we had a gap up and a float higher all up until about 2:30 in the afternoon, and then selling pressure came into the markets. We're still staying positive and green, but not as rosy as it was once before. Now, this week we've got Jerome Powell speaking tomorrow morning at 8:30 in the morning. That could move the market slightly. So if you see some market movement in the AM, that's exactly what's going on. Plus, we've got earnings tomorrow. We've got earnings by Coca-Cola, Lockheed Martin, DR Horton, and GM. And then tomorrow afternoon, we've got SAP and Enphase. And this kicks off this week. We've got Google and IBM later on this week too for earnings. Love earnings season. Love the volatility. Those volatility and moves provides opportunities for us as day and swing traders. Fantastic time to be a trader. However, being the summertime, it is lighter volume. So today's float was likely attributed to that, plus the 10-year, which we're going to get into. All right, so let's go over the market summary board. You can see here we've got the Dow Jones up 0.5%, NASDAQ up 0.51%, S&P 500 up 0.16%, U.S. oil falling down further, down about 1%, gold up 1.45%, getting up close towards that topper end resistance. We're going to show you that here in a moment. And then Bitcoin now retreating 0.41%. Key development going on there in Bitcoin. All right, so let's jump into the S&P 500 heat map that you see here. We've got basically a mixed board all across here. We've got some positives with AVGO, Google, Amazon, Meta, and also NVIDIA is actually pulling the markets down ever so slightly, down 0.58%. Eli Lilly down 1.15%. American Express down 1.47%. But across the board, it's basically kind of a flat day in the markets. A lot of greens, lots of reds, but nothing monumental moving. And the main reason for that was because of the last little bit of pull-in. Now we're starting to pull in even more. So let's flip over the 10-minute chart, take a look at this price action. We've only got a couple minutes left to go until closing. But see, we gapped up this morning, pushed higher, and really chopped around most all of the day, all up until right here at 2:30 in the afternoon. Everything changed. As we see here, we've been going straight down since 2:30. So basically the last hour and a half of the day, completely negating all of the price action that occurred prior to it. Interesting turnaround, an interesting correction here in the markets. We've been talking about this for a while, saying that we are extended. Are we starting to put in a doji candle right here at the top? Maybe even a topping tail here on the SPX at the end of the day. That's certainly forming to be so right now. Incredible change and transformation in the day's activity. Will this continue pushing price down in the near to midterm? We'll see, but we are definitely extended and in need of some sort of correction. Slight technical pullback back down into this range of the 6,000 range. You can see support here at 59.42 on the charts. Next up, we've got the QQQ. Now, the QQQ today and also on Friday were piercing above this inclining trend line created from a pivot that occurred back here on December 16th of 2024, but originates back here from the November 23rd, 2021 pivot high. So this trend line right here is now catching price for both Friday and today. Notice too, we've got two resistance trend lines very close to each other. Again, I kind of described this last week, how when you're trying to break through a door, say a closed door, and say you're able to do so, well, then say there's another door right beyond that. Well, then that's got to exhaust a lot of energy. You can only break through so many of these in any given time before you're tired and need to take a break. That's likely what's going on here with the Qs. We're just broke above this area. Now we're trying to get above this next resistance area and have yet to do so. So this is getting price exhaustion. We need some sort of cool down, pull back on the Qs. First area of support is going to be right here at 540, followed by 523.42. Next up, the SMH. Now, the SMH pushed higher. As you see, we failed to confirm into this parallel here and then retreated back down. Then we pushed higher on this day, on Tuesday, July 15th. Now, this day is critical. We have not yet closed above the high of this candle. Now, we got back into this parallel, but we didn't confirm back into this parallel, closing above this candle. So since then, prices just chopped right along the bottom end of this parallel, not confirming a breakout to the upside. That's raising a flag for me. That's showing me that the likelihood still to this point, as of the current price action on the chart, the likelihood points to a move a little bit lower. First area support has already been tagged back over here. It's not far away at 287.46. But if we start getting a bigger sell-off, this area of consolidation, as well as this area of pivot, right around 258.03 will be the major support area that will be tested first. Next up, we've got the IWM. Now, IWM, you can see here over the past couple of weeks, has really been trading up and down around this declining trend line. Hasn't had the strength yet to break through and push higher with a continuing move on this chart. Now, if I go to a higher time frame, this cleans up this chart a lot. You can see this is a move up with bullish consolidation. So that's all that's going on right now. Even though we're jumping back and forth across this trend line, all of this still at this current state is bullish consolidation for a potential move up here to the next resistance at 229.30. Should this bullish consolidation fail, first support is going to be down here at 211.15. So watch this consolidation, and this trend line will guide you. If we break up to the higher side and then make another confirming move, we're likely pushing higher on the IWM, which has more room to run than, say, the spiders, Qs, or SMH, which are already at all-time highs. Next up, Bitcoin. Now, Bitcoin, we did highlight last week. We have a daily topping tail on the charts. And at the end of last week, you know what else also occurred? A weekly topping tail. Now, we've had this happen before, folks, and I've shown this to you before on the gold chart. Well, let's take a look at the gold chart for a reminder. We go here, we've got our daily topping tail here, and then we also have a weekly topping tail. So what does this mean? This means it's a bearish near to midterm signal on the charts. As in with gold, like Bitcoin, when gold was pumping up like this, it attracted all sorts of investors. Now, Bitcoin does the same thing too. Not only does it attract big investors, it attracts a lot of smaller retail investors too. So a lot of people are interested. When anybody hears the all-time high bell getting rung for Bitcoin, a lot of people are attracted and want to buy Bitcoin. So back into Bitcoin, and we pull this over to the full screen, you can see here on the weekly chart, we're still way up here near the all-time highs, even though we have pulled back a little bit from this $123,000 mark. Right now, trading at $116,000. I still think with this topping tail and the weekly topping tail, I do think Bitcoin should be pulling back to a minimum 113,278. The more likely that this, now that we've got both signals, the probabilities shift even more so for slight downside in the near to midterm. I do picture Bitcoin coming and attacking this 50% area of the parallel that you see currently right around 110,000. So I think we're going to pierce this, but we could get a decent bounce at this $113,000 level, as a lot of retail investors will be waiting and eagerly waiting to buy Bitcoin at that point. Next up, we've got gold. As we see here on the daily chart of gold, gold had a nice push up today and is getting very close to this declining trend line. That trend line is at 34.14. So if we reach that tomorrow, that will be a most immediate resistance on gold. If we break above this declining trend line, that would be very positive for gold, considering this will be the third attempt and attack to break this trend line. Next stop would be the all-time highs at 3,500. Followed by 36.21. However, first things first, we got to break out of this declining trend line. Let's watch price action tomorrow to see if we can get a poke above and then a confirming move on the following day. Next up, we've got silver. Silver, what a remarkable recovery on silver, pushing back up, tagging this measured move area that was already tagged on July 14th. So the resilience in silver is no doubt, it's there. It certainly is attracting a lot of investors and not giving an opportunity for any pullbacks at 36.58 or 34.86. However, this is the zone I will be waiting in for any sort of pullbacks to be buying silver, 34.86 to 36.58. In the near term, we're just a little bit overdone on this chart of silver. U.S. oil. We've been talking about oil for the past little while, how this bearish consolidation is now starting to play out a little bit more. We need to break down beneath the low pivot here for this bear flag to really trigger and start pushing price lower on the charts. My first main target I'm looking at for a downside in oil is down here about $60.50, roughly about 9-10% lower than where current price is at. Next up, Nat Gas also had a decent fall today here on this chart. This chart, obviously, if you haven't traded Nat Gas, it is called the Widowmaker for a reason. It's very bipolar with its moves, seems to get into a breakout situation. Then next thing you know, it actually flips and starts selling off pretty hard. As we've seen here, decent decline, nice bounce up. That makes the first area of support for potential bounce area at $3.19, followed by the support at $3.13 on the chart. That's what I'm going to be watching over the next couple days. Now, part of the reason the markets were going up so nicely today is because of what's going on here on the 10-year yield. Notice I've drew this trend line the other week, how we had an inverse head and shoulders pattern that was activated and was pushing up higher on the charts. Boom, price today pulled down underneath that declining neckline, thus negating that inverse head and shoulders pattern. Phew. Wipe the sweat off my brow, folks, because if the markets were going to be, or if the 10-year yield was going to be pushing up here to this major move, that would have put a lot of pressure on the markets, and likely we would be seeing a lot more red candles on the S&P 500. So for now, the markets are enjoying this reaction here on the 10-year yield, with the yield coming in as we see here on the charts. Next up, we've got XYZ Block. Now, Block today, as you see, gapped up very nicely today, was trading pre-market hours roughly right about $80, right around $79 to $80. Ever since the open, it really just sold off, but then attempted to come back up and pierce this declining trend line. Ultimately, fantastic move for Block, especially considering this big move from the bottom that most charts are now showing and displaying here. So one thing, first things first, this move that I'm showing right here is, and it didn't quite fit. It's very, very close to a sleeper hold scenario. It's one of my courses I teach, Mastering the Overnight Trade, the sleeper hold. This sort of setup, an accelerated move into a resistance area, should result in a little bit of a pullback over the coming days to gain momentum, to continue moving higher on the chart, to attack the next resistance area at $86.73. Be looking for a pullback on XYZ in the next coming days to come down to around the $75, $76 range, maybe even as low as gap fill down here at $73 before another attack to break this declining trend line and ultimately start attacking the next resistance level on this chart. Next up, we have Opendoor Technology. Now, this is a great reminder, folks. Anybody, don't have FOMO investing in stocks. Look at this huge run that occurred today on Open. We closed right here, opened just right here, about 24% higher on the day, and pushed up as high as 118% today. Incredible move on this stock. But as you see here, a lot of investors took profits, pushing price right back down. Notice also price action came up to this level right around $5. That was also the location of these previous pivots. So it saw immediate selling pressure once it tagged that area. Price pulled back in. So where can you buy this if you want to try to capitalize on the next move? First area of support that I recommend getting in is at $2.21. Notice that corresponds with previous pivots. That is one of the safer spots. Doesn't mean it can't go down lower, but it's one of the safer spots to hope to capitalize on a second wind move of this stock pushing up some to the tone of 120% in a day. But needless to say, this sort of selling pressure doesn't bode well for another immediate 120% move up higher. All of these sellers, you know what? They sold through a lot of buyers who were eager to get in through this big run, which then eliminated some of the other people standing on the sidelines. They watched this slaughtering take place. They don't really want to be buying up here at $5 and then be left holding the bag when price closes the day down at $3.21. Even though this can move, be careful, be conservative, wait for a right support level. That way you can maneuver in and out of that position with less emotions going on for your trade. Next up, JOBY Aviation. Now, JOBY nearly erased all of Friday's gains here on the chart, ultimately putting in immature bullish consolidation on the chart. What do bull flags like to do? They tend to like to slope downward, if you will, like a little bit of a tailing off price like this. If we do have bullish consolidation continue, first area support at 1534, notice how we've cleanly broken above this inclining trend line. This would be a great area to start getting into JOBY if you did miss investing in this new EV aircraft technology. So if we have price come down here to the support trend line, that's at 1454. And even if it pierces, now keep in mind, when we have big moves like this, much like with Opendoor, they can retrace significantly. That's normally what happens with accelerated moves up. You have an accelerated move down, but that provides opportunity for buyers to step up at the right levels. Now, if we pierce this inclining trend line, watch for support at 1336. That should collectively give you an average right here about 1450, which will be a great spot for a continued move higher on the charts. Now, keep in mind, JOBY as well as ACHR are not yet profitable companies. So these are more spec plays, smaller cap plays. Go lighter on these shares if you do decide to play those. Now, next up, ACHR. ACHR completely erasing any gains on Friday, showing much worse strength than JOBY, even though JOBY is selling off also today. So the first spot I would be interested here in ACHR is going to be down here on this inclining trend line, roughly about $10.70. But if you notice, this trend line has now been tagged 3 times. So now it's vulnerable for a break. So if you do get in at the 1070, you have to keep in mind the price could go lower and retest this declining trend line right here, which is currently right about $9.09. So be prepared to add to the position, but you could get in here, and that very well may be the spot, and it continues moving higher. We just never know with investing, but you've always got to prepare for the worst. That way, you're ready, and your mind's ready too, to ultimately take advantage of that next support level and get your average down so you can have a winning trade. Next up, Solana. Solana, what an incredible push. A lot of these altcoins have done this. If you notice, we've got an inverse head and shoulders pattern with this declining neckline outlined right here. Price action, when it broke out, we put in a bull flag and then we broke higher. We didn't really, in essence, break higher, then come back and retrace. We really just consolidated on top, which actually teeters towards a potential breakdown. Whenever you have consolidation above a resistance level, it usually implies prices going under, but not like this. In this situation, we pushed up, accomplishing the measured move feet from this inverse head and shoulders pattern. So where does that take us on Solana? Solana very well could continue higher, but with this big psychological level of the $200 figure plus the measured move, we likely are going to start coming back in on the charts at minimum right here to about $190.46. An ideal pullback to have this momentum continue and go higher on the charts would be a pullback to this second inclining trend line, currently priced right around $173 to $175, depending upon when price gets down into it. Now, XRP, this has a clean example of zero retracement. This has truly been a remarkable push, a lighting of the fire, if you will, for XRP to make new all-time highs and then also not have any sort of retrace off this blue inverse head and shoulders pattern. We didn't even get a pullback on the next significant resistance trend line that it broke through. All XRP is doing is basically just going higher. Well, folks, this doesn't always happen. And plus, whenever this musical chairs song is over, the price will end up coming back down. I don't care what the potential is for XRP. Stocks nor cryptos go straight up, nor do they go straight down. And if they do go straight up, they usually result in straight down moves. So be prepared, get ready. You didn't miss your boat on XRP. Let's just say hypothetically you did. It's okay. There's tons of other cryptocurrencies to get into. But this one, for right now, this one is a target for potential pullbacks and buying opportunities. Support levels displayed here on your screen that you see, $3.25 is the first support level, followed by this inclining trend line. Sorry about that. We had a little technical difficulty. Let me get my screens back up so that you can check out what's going on the screen there of XRP. Sorry about that again. But lastly, I was saying our support areas underneath this inclining trend line at 273 are $2.56. And then lastly, $2.32. With this incredibly strong push, I really doubt it gets down here to the 250s and 230 range. But you know what? Anything can happen in trading. So nothing's a guarantee it won't get down here. But the strength for right now is telling me these two levels, 325 and 273, are going to be the buying zones for XRP should we get a pullback. Last couple stocks, we're going with some heavyweights. We got Google, as you see, pushing up beautifully today, up 2.72%. Now closed at around $190 on the chart. Great move on Google. This has been a really lagging play to the other mega cap stocks out there with Microsoft, NVIDIA, AVGO, and so forth. Google really has some room to catch up. So first area of resistance coming up not too far away at 192.48, followed by this inclining 50% area, the parallel. And depending upon the time in which it gets there, notice we've got a gap fill here at 201.23. Then at this all-time high candle, we also have a gap fill at 206.38. Both of those levels, should they correspond with this 50% area, the parallel, will be significant resistance on the chart of Google. Be watching that. Any pullbacks down will catch support on this inclining yellow trend line, currently intersecting right here with this inclining parallel right at 176.43. Last up, we've got Amazon. Now, Amazon, as you see here, did push through this bull flag measured move. This bull flag was derived from this consolidation right here, all foreshadowed that the price action was going to go up to 228.31 here on the chart. So we've now done that. Congratulations to Amazon, and for any of these investors that hung around through this bull flag, they have now been paid off and can start ringing that cashier button with the selling pressure that could come in. However, Amazon did push through and push through nicely today. So we could be going up a little higher. As you see on the daily chart, we're not even oversold either at this moment. So I do see in the cards a potential move up to 233.27. Then let's reevaluate from that spot. But in the near term, that is a very good possibility. All right, folks, thank you guys so much for watching and tuning in to Trading the Close. Again, my name is Drew Dosek. We'll have some more chart setups for you tomorrow. Until then, you guys have a fantastic day.